We're continuing with our 2015 Outlook coverage, and we all can't wait to get Peter Hugg's thoughts on his forecast for 2015. So, Peter, thanks so much for joining me in studio.
Nice to be here again.
So, yesterday I was watching a playback from last year's Outlook with you, Peter, and I was kind of surprised because you gave the Fed some credit. You usually are a bit of a critic of the Fed, but I wanted to ask you, how do you think Yellen has done so far this year?
I think she's done okay. I mean, she's followed in Bernanke's footsteps, and, she's ended the bond buying program, and that's off the table now. And she's very careful on what she says. She's been very careful to not scare the market. She's put out the hints that the U.S. economic recovery is better, is getting better, and somewhere down the road, the Fed will normalize rates. And so she's done everything, I think, extremely well, given the circumstances of everything we've come from. So I give her pretty high marks, probably a B+ so far.
Wow, B+. That's really like an A for an average person.
For a Fed official.
So, Peter, a big Fed day tomorrow. Do you think we can expect any big surprises? Do you think the Fed will make any hints on rates?
I don't, and the reason I don't is because I don't think it's the Fed wants to step in front of the holidays. I mean, if they make an outright comment that they're going to raise rates on a specific date, I think that could have a pretty serious hit to the equity markets. And I just think the Fed stays out of the way until the holidays are over. And, I don't think they're going to make those kinds of announcements probably until their meeting in January.
So what does that mean for gold right now, Peter?
Again, I've come out over the last week or so with comments on the metals markets.
Right.
This is a really, really awkward time for the markets. You've got the dollar that is sort of reversed its strength against the euro, but I don't think the trend is reversed. I think there's maybe some corporate repatriation of foreign currencies, which has created some selling in the dollar to balance the books. People that were long equities throughout this year have got some serious profits in there. I could see them selling off some of their equity positions to lock in their profits. Everybody wants a Christmas bonus. So, there's a lot of noise in this market right now, and the noise is causing some volatility in the metals. So it's interesting to look at, but I don't see this as a trend, a developer of a trend, and I won't see that until January.
So it's an awkward phase for gold, kind of like the teenage years?
Sort of. People are just not sure. I can tell that because silver's really rallied from $15 to $17 in the space of a week. And there's very, very little retail interest in this market. I just think people are just watching it. And if this trend is for real and the macro trend has changed, there'll be plenty of time to get into the market in the new year.
All right, Peter. Well, this is an outlook. So how do you see gold in 2015 and in turn the U.S. dollar?
Well, again, I mean, anybody that goes out and says gold's going to $5,000 an ounce or $500 an ounce is probably somebody you should ignore. But I think the macro trend, assuming no surprises, and by surprises I mean geopolitical events, is probably for a continued strengthening of the U.S. dollar, continued strengthening of the U.S. equity market, and more issues ahead for the European economy and the Japanese economy. So on a macro event outlook, I would suggest that at least in the first quarter of next year, the metals may have some headwinds as the dollar continues stronger.
Oh, that's interesting. So some action in the like Q1, Q2.
Q1, Q2.
Okay.
But I think the uptrend in the metals, there's always a final leg in the uptrend in the metals. But that to me will be, this is feeling like sort of mid 70s to me right now, late 70s. And, the final uptrend in the metals, not maybe the final, but the blow-off phase on the metals, I think comes with the inflationary cycle. And I do think that's coming, but I still think that that's probably an event that won't become a forefront event until maybe third quarter 2015.
And I think that's a good point. It's important to look back at history for clues maybe, Peter. So now let's look at silver. As you mentioned, struggling to hold gains here, but what's your outlook for silver in 2015?
Again, I think silver does not trade independently to gold. I think it trades with gold. I think it'll hold a ratio of somewhere between 68 and 74, so maybe an average ratio in around 70 for the year. Silver bouncing between now and the early part of next year up to 1920 is certainly possible. I don't think the macro trend there has changed as well. And should I be right on the macro trend on the dollar and the equity market, I suspect gold will again test 1130, possibly breach 1100, and get into the low thousands before it finds a comfortable bottom. If those numbers are accurate for me on gold, I would suspect silver could see the $13, $14 range before it's all over.
All right, Peter. So is there one metal you think will be the shining star next year?
I like the PGMs. I've been, it's been frustrating. You've had to be patient, but there is going to be a significant supply shortage of palladium on the market, relative demand in 2015. That is the same case for rhodium and to a lesser extent platinum. So from a metals investment point of view, I like that group better than the precious metals, assuming no geopolitical events. And the reason I like them is because if the precious metal complex goes up, these will go up in sympathy.
Okay.
But these may also go up without the precious metals going higher, just based on supply-demand fundamentals.
So you wouldn't use them as a hedge to gold and silver. You'd use them as a complement.
I would use them as a complement. I mean, I probably, if I were buying, I'd be buying palladium, platinum ahead of gold. But again, if the whole complex goes up, you've got the benefit of the PGMs moving up. And if the economy gets better and precious metals, gold, silver, basically remain stagnant, I still think you have upward appreciation in the PGM group.
Good thoughts from you today, Peter. Finally, the most important question, your favorite holiday song.
I'm not sure it's a holiday song, but my favorite song is at this time of year is Ave Maria.
Very deep, Peter. Very nice. I thought you were going to say Frosty or something.
Yeah.
So thank you so much and happy holidays.
Thank you. Same to you.
And thanks for watching our Outlook 2015 with Peter Hug. We'll have more for you throughout the next few days. In the meantime, you can email us at newsfeedback@kitco.com. Thanks for watching.